And welcome. It's Mary Ellen McGonagle here with your Friday afternoon MEM Edge show. As always, this is the show where we bring you where the action is in the broader markets. And we did certainly have quite a bumpy ride last week. We are going to take a look right now at some of the news that drove price action last week. And certainly front and center was the earnings report from Micron MU, and we are going to talk about their explosive results, what we saw in response, and what it may mean for the semiconductor group. Also, last week, we did get very key inflation data. That's the CPE numbers, normally used by the Federal Reserve, very closely watched. We, of course, now have a new Fed chair in place. As far as how much importance he will put on the number remains to be seen. However, that data did come in a little above estimates, not overly concerning. There were mixed responses to that inflation data. And then also we did get news relating to home builders, where Congress passed a major housing affordability bill that did boost the home building group. And then in other news, we did see bank stocks rally after 31 major banks all passed what is called the annual stress test. And this test tells us whether these banks would able to survive any kind of economic backdrop, and they did all pass. So in turn, we did see a nice rally in bank stocks as well. So let's go ahead from here and take a look at these markets and drill down, really get a good feel for what's shaping up as we head into July. Here we are, daily price chart of the S&P 500. Most notable certainly was today's move, so that we did close just below this key 50-day simple moving average. We now have a negative RSI and a negative MACD. So certainly overall a negative bias. However, as you know, we are going to get much deeper than this broader view and really get a good understanding of what is taking place, because there is a lot as far as newer areas coming into accumulation. So let's go ahead from here, S&P 500, and we are looking at a 2-month daily price chart view. Front and center, healthcare up over 7%. I will share with you the groupings within healthcare that are pushing this index quite a bit higher, and share some of those reasons why. If we go ahead and pull up a weekly chart, you will see that we did emerge out of a lengthy 6-month base and new highs. Let's go ahead and from here and take a look at that next sector that is up here at the forefront, and it is utilities. From there we see REITs, and generally speaking, these areas are more defensive. They do, by and large, particularly utilities and REITs, offer a yield. So we will get into certainly utilities and healthcare. I'll share with you some names there. And financials, we talked about bank stocks faring well last week. The overall financial group was flat, but there were some bright spots there as well. And moving through, you do want to be aware of some of these more weak areas. And of course, we can see communication services, XLC, down another 2.5%. A number of telecom stocks. Certainly Alphabet is a big holding here, as is Netflix. Both stocks down considerably this week. So we can see that that group is not an area that you would certainly want to necessarily be involved with. Energy, we did see oil prices continue to decline. Here we are with XLE. You can see we are leveling off a bit here, but overall the group has been declining. Also, taking a look at technology, you will want to be aware that it was the worst performing this week. XLK down 5.2%. You can see that we had that RSI dip into negative territory. We do have a MACD that is still in positive territory. So while we have broken below this 21 and 10-day simple moving average, overall this tech sector is above that key 50-day simple moving average, we will drill down. I'll share with you a group that ended the week on a bullish note that is within technology. And of course, we will take a look at semiconductors as well. And then one other area that outperformed this week is staples. Another defensive XLP is the ticker symbol, and the group was up almost 2.5%. So you can see that the more defensive areas are seeing buying. There are also areas that had been down and out. So again, I will share with you a view as it relates to some of these turnaround areas that had been underperforming but are coming under accumulation. So from here, let's go ahead and take a look beneath those sectors. I'm going to share with you ETFs that are very powerful as far as, again, highlighting where that relative outperformance is taking place. We have a 2-month daily price chart view, again, sorted by that relative strength. So front and center, I talked about healthcare being the top performing. Let's take a look at IBB, and this is the NASDAQ biotech ETF, and it was up 6.8%. And those of you that follow my show weekly, you will know that I've been highlighting stocks here in the biotech area and best practices for you to uncover candidates using stockcharts.com. So you will want to go back over the last 2-week shows and key in on those areas. And then also we talked about bank stocks. This is KRE, the regional banking ETF, up 4.6% this week, and a nice multi-month base breakout taking place. There are several names on the suggested holdings list for my MEM Edge report that are participating in this outperformance. So if you would like to have access immediately to those names, use that link below to trial my twice weekly MEM Edge report at no cost. They are very much in confirmed uptrends, and you will want to be aware of those names. And then I did talk about home builders. This is XHB, and the group did outperform this past week. You can see this sharp advance on that new congressional bill. And there are a couple of names that we're going to take a look at should we have time later in today's show. But right now, I do want to go ahead and share with you the fact that XRT, this is the retail ETF, and it was up in line with the S&P 500, but notably in a bullish position. And this is an area similar to technology when some of these bigger growing names begin to take off. You do want to be aware because they will tend to be outperformers, provided that they have those growth numbers in place and are looking at growth going forward. Let's go ahead. I talked about technology, that there was one area that ended the week somewhat on a bright note. And here we are. This is IGV, the software ETF, and it was up 4.1% today. A couple of names there. It is, again, an area that is very down and out. It is part of that rotation out of those higher multiple AI-related growth names and then into some of these more undervalued areas. We'll take a look at a couple of names there as well. And also of note here in looking at these various areas, I did want to highlight volatility, and it did end at about 18.4, somewhat elevated, but certainly not concerning if we go back to this early June period and other periods where we did see a sharper pullback. So that 18.4, again, elevated, but not a lot. And also of note, we want to be on top of yields. And here we are with the yield on that 10-year treasury. You can see that the overall trend is downward. We ended at about 4.4%. So that is good news, certainly for equities and in particular growth stocks, a declining backdrop in interest rates. So you do want to stay on top of that metric as well. So let's go ahead and take a look at semiconductors. This is an area that I certainly did want to share with you, and I will go ahead and highlight this further as far as what took place last week. This particular group was down almost 7.5%. We do have the RSI still up here in positive territory, and semiconductors, despite this sharp pullback, closed just below that 21-day simple moving average. You can see we had that black line down through the red with the MACD. However, this uptrend is very close to being reclaimed. Despite the sharp pullback, semiconductors overall are hanging in really quite well, certainly given some of the sharp reversals that we did experience last week. So from here, let's go ahead and take a look at the NASDAQ composite. I talked about this area being down 4.6% last week, and we do now have a negative RSI and a negative MACD. Now, notable is the fact that you can see on this volume, it was not quite as heavy as we saw going into the beginning of this week. Again, use that link below. I did put out special reports Monday, Tuesday, and Wednesday of last week, and they go into great detail as far as where the deterioration took place, where the brightness was, and also that midweek report on Wednesday. So very, very insightful as to where we are in the markets, and in particular with the NASDAQ and these high growth names. But notable today is the fact that the NASDAQ is finding support at this recent low. This is going to be your first key area of support. This weekend, I will be highlighting that next key area of potential support before we can talk about the NASDAQ potentially re-entering that uptrend. And I do want to share with you another view of the NASDAQ. And in particular, this is the NASDAQ 100. It's going to be those 100 largest companies within the NASDAQ. Of course, it will take into M7 names and others. But let's take a look at today's price action as far as what took place. We did initially move lower with that NASDAQ 100 grouping. However, we did end today up on the day. So what we're going to do from here is take a look at what areas may have driven this reversal. You want the possibility of getting in front of these reversals. We can go back to this late March pullback that took place because of the initiation of the US-Iran conflict, higher oil prices, and then here we are with the beginning of a potential reversal, which did pan out. So here we are, we're taking a look at today's price action. Let's go ahead from here and take a view of the NASDAQ 100. And here we are. This is a chart of the NASDAQ 100, quite a bit different than the broader NASDAQ because we are not below the 50-day with a negative RSI or a negative MACD. We are bouncing around up here. So what we are going to do from here is take a look at the underlying stocks within the NASDAQ 100, all very accessible with Stockcharts.com. And from my work, I wanted to key in today on the names that have charted that reversal that we saw in those NASDAQ 100 names. So let's go ahead and take a look at some of these outperformers today. And I'm, as always, on the lookout for thematic moves. And what emerges immediately is looking at Workday, Datadog, and then also Intuit, Atlassian, DocuSign. These are all software stocks. Now, from here, what I want to take a look at, and there are any number of ways that you can view a given list. Right now, we're looking at performance. You can do what's called a symbol summary, a candle glance, but let's key in again on this performance view. And what I did want to share with you as it relates to some of these top performers, you will see a thematic move there as well, because again, they are very down and out. This is Workday, a major software company, and you can see that this stock did find support above these April lows, and we are potentially reversing, very similar to this early June period. You will want to see the stock get back above these shorter term moving averages, get that MACD up into positive territory as well. And it's all going to be news driven. So let's go ahead and move through, take a look at some of these other down and out names. Datadog is another highly respected name in software, certainly relative to enabling clients to really utilize AI. And you can see here's this gap up on earnings and advance to a new high. And we are back in bullish territory without ever really getting that RSI into negative area below 50. And that's certainly a name that you will want to keep an eye on. So we will not go through each of these names, but I did want to share with you BIIB, certainly a major biotech stock, and I wanted to share with you this sharp advance today so that we did experience a nice base breakout. In the end, what we are looking at is those stocks in the NASDAQ 100 that are outperforming the markets. You want to stay on top of that trend as that NASDAQ 100 continues to firm up and look not quite as negative as the broader NASDAQ. Now, we would be remiss to not take a look at Micron. They did come out with explosive earnings Wednesday. After the close, we saw a tremendous move higher on Thursday, up about 15%. Now, the stock did pull back about 6.8% today, but let's take a look at this chart on a wider view than looking at that intraday price action. And you'll see that MU remains above that key upward trending 10-day simple moving average. This is a stock that we added back to the MEM Edge report on this reversal in early April. And I imagine a number of MEM Edge report subscribers do own a fair amount given its sharp advance since then. So it is worthy of highlighting. You can see that we remain in a confirmed uptrend. Now, I talked about my reports on Monday, Tuesday, and Wednesday of this week, and one of those reports went into very similar price action in MU back in November. The stock was down about 17% during this period. This one-day decline on heavy volume was when NVIDIA reported their earnings on that day. And the stock, NVIDIA in particular, declined despite very strong numbers. And we saw a lot of sympathy trading. However, back here in this period, another notable item is the fact that the pullback was very similar in the reasons. The AI potential bubble, were these stocks ahead of themselves? And we did see a nice recovery. So certainly that is the kind of thing that I will be getting quite a bit more into over the weekend. Let's go ahead from here, and we're going to take a look at some of the other areas that outperformed this week that helped these markets broaden out. I talked about XRT retail, so I can share with you a couple of names there that are on the move higher. First up is Starbucks. This all recovery story as far as the former CEO of Chipotle taking over. And you can see that it is now in a confirmed uptrend, positive RSI, MACD now up here in positive territory. So certainly very enticing with this turnaround taking shape in a bullish fashion. Let's go ahead and take a look at a couple of names that are certainly well known in the retail space. This is DKS, Dick's Sporting Goods. However, also notable is the extreme volatility in the stock. So while we are in a confirmed uptrend, it would not be attractive to me just for this very reason. Just a lot of back and fill, not a consensus move as far as the stock being in an uptrend. But however, here is a name that I've talked about 2 weeks ago. This is Best Buy. We had this gap up. Take a look at this high volume. And since then, again, volatile, but we are in a generally bullish position here. And this is all about AI related products. Best Buy is seeing a big uptick in their sales because of those AI products. We can also take a look at another retailer, somewhat in Starbucks realm, in the sense that they are a coffee purveyor, and this is Dutch brothers. The stock did break out of a lengthy base here, and we are in a back and fill formation, sharp advance today. The company is continuing to grow. So we are seeing growth metrics that analysts and the markets like. So the stock is in a nice uptrend. Another area we talked about with healthcare, and I wanted to talk about some of these names. This is IHI, Medical Devices ETF. So we are just entering an uptrend. This week, the group is up above this key 50-day simple moving average. We have a bullish RSI and that MACD poised to confirm with a bullish bias. So when looking at these names, I did uncover a couple of names, certainly notable heavy weightings in this ETF. First up here is Abbott Labs, also reversing its downtrend, but with a more bullish inclination here with that MACD up there in positive territory. And then we can also take a look at SYK. This is Stryker, a major holding. I will want to see how does it perform at this downward trending 200-day. But for those of you that are on the lookout for potential turnaround candidates and also want to see high yields, we can take a look at Medtronic. This would not be super appealing to me, but it does have a 3.4% yield. We are on the cusp of a nice 2-week base breakout. And from here, another ETF talked about the fact that utility stocks traded higher. Let's take a look at an ETF or a sub-industry grouping that might not occur to a number of people within the utility space. And here we are with CGW, and this is the Invesco Global Water ETF, gapping up. I'm going to share with you a couple of names here, and it's an area that may not come to mind initially when talking about data centers and growth in that area. But these water utility stocks are very instrumental as far as providing data center water cooling systems. And in particular, ECL is one of the dominant players there. And what you can do with stockcharts.com is access the yield. It's not that large, but it is a nice 1% yielder in a nice confirmed uptrend. Another area that is on the move higher is healthcare providers, and that IHF is the ETF for that area. And one of the top names in this space is United Healthcare. You can see the stock has been advancing since April, and it's all about the company's restructuring. It's being very widely viewed as positive among Wall Street analysts, and there certainly are other names in this group that you might want to take a look at. And before we end today's show, I do want to share with you a close-up view of NVIDIA. The stock has been struggling, and it did underperform again last week. So here we are with a daily price chart of NVIDIA. 2 weeks ago, we broke below that key 50-day with a negative RSI, indicating a near-term negative potential move. And the stock since then has seen this 21 and 10-day simple moving average trend downward. When you see these moving averages, the shorter moving average closing below the longer term, that's called a death cross. Quite simply, it is a negative indication. We have a MACD very much in negative territory with that RSI. And it is notable that one of the reasons NVIDIA did pull back so much this week is the fact that they are now being viewed as a key provider of services and products primarily for stage 1 of AI, and that's going to be all about GPUs as we are seeing this broadening out into memory and other more advanced memory devices. NVIDIA has lost its luster. The other item that came out last week is the fact that they may be losing pricing power among their previously very highly regarded GPU product. So that is notable if you are an owner of NVIDIA. Most importantly is the fact that while the overall semiconductor group, let's go ahead and take a look at that semiconductor space again, and you'll see a very stark difference as far as the charts. Here we are with semiconductors. They did pull back quite a bit last week, but we do still have a positive RSI and MACD, indicating that there's still underlying strength within the semiconductor space, certainly relative to NVIDIA. I'm going to leave it there. Everyone have a fantastic weekend. I'll look for you here again next Friday.